Hey everyone, Couch Investor back on our earnings video for today. So Unity reported their quarterly earnings, and I'll already tell you this right now. I will be selling all of my position of Unity. It's still pretty small right now, 2.5% or so of the portfolio, but I'm done. Bad management, bad execution all around, way too much drama. And it's a shame because Unity operates in a duopoly. It's either Unity or Unreal Engine, and yet they keep dropping the ball again and again and again. And to be honest, right now, I can use that cash with better companies. Now, we're going to talk about the earnings report, the bad numbers, the okay numbers as well. But first, I want to touch on this. So they announced that they're selling $1 billion in senior convertible notes. This amount of their 2% convertible notes due 2027. Now, I want to mention that the use of proceeds is this. The selling stockholders will receive all the proceeds from the sales under this perspective of the notes and the shares of common stock issuable upon conversion of the notes, if any. We will not receive any proceeds from this sale, so they're not raising money for themselves. That was very important for me to add because I've already seen a lot of people talking about them raising money for themselves, etc., etc. Well, that is not the case. Now, currently, Unity stock, well, the support line right here at around $25 clearly did not hold after hours. We're pre-market now. We're just under $22 or so. So you're probably going to tell me, you're okay with selling the bottom? Yeah, I'm okay. I mean, in hindsight, maybe I should have taken all of the profits here back in July. in hindsight, if I could, I would have sold everything when it was at all-time highs and buy at all-time lows, but that's not possible, unfortunately. So yeah, that's currently the state of Unity stock. Now, currently the company is valued at around $9.5 billion or so. So again, maybe some rumors will come out of them being acquired by a big tech player. Could be, because again, a duopoly, pretty lucrative. Now, before jumping into the report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I first want to start with a couple of words from the new Unity CEO. He spent over a decade as Red Hat's CEO, where they built a successful business focusing on customer needs. Unity and Red Hat are both mission-driven companies committed to customer success and innovation. After a month at Unity, I believe that our key product, the Unity Engine, is unique and a foundation upon which the game industry was built. I also believe that the combination of Unity and ironSource provides us with the assets, capabilities, and data to enable our customers to successfully build and scale their businesses. And I'm impressed by the people at Unity, some of the brightest and most passionate in tech. Of course, he has to say that. This leads me to believe that we have a significant opportunity to accelerate revenue growth, improve profitability metrics, and increase free cash flow generation going forward. However, we are currently doing too much. We are not achieving the synergies that exist across our portfolio, and we are not executing to our full potential. We aim to address these opportunities to emerge as a leaner, more agile, and faster growing company. We will share specifics as plans are finalized over the next few months. They did not give us guidance. Nothing right now. By the way, this last paragraph here was every big company at the start of 2023. And now we're at the end of 2023 and Unity is waking up a little bit, which again goes back to bad management, bad execution. Now, if we look at the financial overview. So while revenue came in within guidance, we believe we can do better. We continue to manage cost well and beat our adjusted EBITDA guide. We delivered revenue of $544 million within our guide range. This represents a 69% year-over-year increase or 8% growth on a pro forma basis. GAAP net loss for the quarter was reduced by half from the third quarter of the prior year to $125 million, a net loss margin of 23%. So that's one of the good things here. Yes, the business is becoming a bit more profitable each and every quarter. Adjusted EBITDA was strong at $131 million, above our guidance range of $90 to $100 million, resulting in a 24% adjusted EBITDA margin, and free cash flow for the quarter was $104 million. So okay, there are still some good numbers here, but to me overall, I've just lost it when it comes to Unity. Then with regards to the two segments, Create Solutions revenue was $189 million, flat year over year, with core subscriptions up 19%, excluding China. With regards to growth solution, revenue was there $355 million. That was up 166% year over year, or 12% on a pro forma basis. And this was to me the most important part, which obviously guidance. So a complete reset in my opinion here. We are committed to a customer first business model. This business model is enabled by the right product portfolio, the right initiatives, and clear focus. And when executed with excellence, this business model is designed to deliver faster revenue growth, improve profitability metrics, and increase free cash flow. Several weeks ago, we started a comprehensive assessment of our product portfolio to focus on those products that are most valuable to our customers. We're also evaluating the right cost structure that aligns with the more focused portfolio. We're acting quickly and expect to make final decisions over the next few weeks. We expect to start implementing the plan within the quarter and expect to complete all the interventions before the end of the first quarter of 2024. This will likely include discontinuing certain product offering, reducing our workforce, and reducing our office footprint. This is the big deal here. This will likely include discontinuing certain product offerings. The exact timing of this intervention is difficult to estimate. We are therefore not providing guidance for Q4 and full year 2023. We will provide guidance for 2024 with our fourth quarter and full year 2023 results. At that time, we will also share more details on our operation interventions, which are expected to gradually improve our results. We expect 480 million of fully diluted shares at the end of the year compared to our prior year-end expectations of 488 million, and it's much higher, I believe, than what we're at today. And so, concluding thoughts by the interim CEO here, Jim. We are committed to creating value for our customers and shareholders. Our success is tied to the success of creators using Unity. We are fortunate to have passionate people both inside and outside the company who share our vision. I could not be more excited to be part of this journey, and I look forward to working alongside all of you as we continue to drive Unity forward. Now, of course, this interim CEO could be great, the turnaround could be great, right? It will become a leaner, better executing company. It could be, and then, I don't know, in Q4, the stock doubled from here. Who knows? But do I want, again, to give them another quarter, to give them another chance? I mean, it's been a while, right? It's been a while since Unity came out and said, oh, we're going to do this, we're going to do that. And to be honest, yes, that announcement, that pricing change announcement was the last straw for me. To be honest, why didn't I sell before? Good question. I was focused on other things. But yeah, I mean, the turnaround can be great. We've seen great turnarounds across a lot of industries, so the same can be done here with Unity. But right now, I do see myself as someone that wants to maybe have a little bit less companies in his portfolio, especially at the lower end of my portfolio, the 2 to 3% positions. And so I could use that cash to increase my stake, for example, in SoFi, in the Trade Desk, which is down close to 30% right now. And I'm more comfortable holding those companies because those companies are executing very, very well, have a good management team as well. And so that's one of my main reasons why I'm selling Unity. Of course, you can disagree with me, and that's fine. Do share your thoughts down in the comments below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye-bye.